First of all, I'd like to convey my thanks to Professor Charan Singh, the Indian Institute of Management, Bangalore, IMF, because this conference is being held jointly, for inviting me here and for giving me this opportunity to listen to you and to share my thoughts with you. I couldn't be present yesterday, so today's session, part of the day, I have attended. And yesterday's session, I went through some of the material which was available to me, and I found it very interesting, very thought-provoking, both yesterday and today, and very illuminating some of the issues which have been discussed, how the policies are affecting the segment, the housing markets, and where do we stand now and what do we do for future, particularly in the Indian context, where we have a huge problem of housing, and there is so much requirement for housing, and for this only the the new government it has set before itself the goal of housing for all by 2022. So it is a very ambitious goal, very ambitious program, and a lot will have to be done to achieve this goal, which is very daunting. But we hope that if all the players come together, this can be achieved. But we have to do a lot of structural changes, a lot of policy changes, a lot of other issues, some of which have been pointed out. Credit, of course, is one of the most important things, but there are other issues also which need to be addressed. It was very interesting to see the yesterday's session, one of the sessions in which the role of Trinity, the three policies, was discussed. Today also there was a reference to monetary policy, and the monetary policy, the macroprudential policies, and the microprudential policies. It was discussed, and more so for the macroprudential policies, how they impact the housing prices through the credit growth. I think this has become very important because both monetary policy and the macroprudential policies, they have come to play a very important role. Monetary policy we have discussed today, how it is affecting the credit, availability of credit, the cost of credit. On the macroprudential policies, I think this has become much more relevant now after the great recession of 2008, after the collapse of Lehman Brothers. Thereafter, I think most of the countries, particularly the G20, they took it upon themselves, this task, the Basel Committee, and then they went on to Basel III. And these issues were part of that. What do we do on a macro level to reduce the risk and protect the banking sector, which is affected by fluctuations and all that. That is why the Basel III norms have been revised. The buffer, the capital or the counter-cyclical capital, they have been provided for, apart from many other things. Now, on the macroprudential policies, basically this has two different segments. One, of course, is a coordination among different regulators dealing with the macro at the macro level. And in this, various countries, they have come out with different models. UK, you have this FPC, the Financial Policy Committee. USA, you have FSOC, Financial Stability and Oversight Control. In India also, we set up the FSDC, Financial Stability and Development Council, headed by the Finance Minister. So the gravity of this great recession was such that every country had to do something to, though India was not that affected to that extent, but nevertheless there was a lurking fear always that the country, the financial sector can always get affected because of the various reasons. All the countries, they are today so integrated with each other that no country can say that it is insulated from all that happens elsewhere. So India too had some impact, and we also adopted some of those policies as whether macroprudential or Basel III. Basel III we are now in the process of implementing, and the deadline is of course March 2019, which we have kept for ourselves. So by then I think we would have provided the required recapitalization to the banks which are required to provide for the credit requirements of the economy, including the housing sector. Housing sector is one of the sectors. Other sectors also require more capital. Now, if we look at in the Indian context, if you look at the booms and the busts, as has been mentioned already, 2004 to 6, I think, that was a boom period. It was a sudden boom. I remember very vividly, I had come to Government of India in 2003, and nothing was happening till 2003. Suddenly in 2004, there was a boom, and the prices went skyrocketing, double, triple, within a matter of days. In some places like Gurgaon, or maybe Bangalore, or some places you have spoken, they were doubling, tripling in a couple of months. Matter of days they were going up. Every day prices were going up. And people were buying and selling, buying and selling. So it was so much of speculative market that time. So that is why that couldn't sustain. And then when this great recession happened, 2007-8, and there was a bust, 2007 to I think 10 or so, the prices came down. There was less of activity. In fact, at that time, many of the developers, they had stopped building luxury houses because luxury apartments were the most affected by the bust. So they had many of those projects, they were left incomplete also. But then subsequently, I think in 2009-10, around that, when the economy started picking up, India was growing at 8 to 9%. At that time, when this boom was there, India was growing. Then the growth came down, and along with that, this happened, and then again it picked up 2009 to 12. It remained quite robust, the prices. And then again, the Indian economy slowed down, and last 2 years it has slowed down, and with that the housing sector also came down. Now, particularly last 1 year or so, as has been very rightly mentioned by my banking friends, the industry is now facing difficulty. There are less of demand, credit is not available. It's such a difficult thing. On the one side, there is no demand, and if somebody wants to have credit, he doesn't get credit because the banks are wary of the projects getting off, because they feel that overall there is so much less demand now. If we provide for the credit, then the project may or may not take off. So even the genuine person now, he finds it difficult to get credit. So it is a cycle which has to be broken sometime. So now we are at a downward state where the credit offtake, it has been mostly in double digit overall. Last year, Dubeji has done extremely well, but overall also it was double digit, 15 to 20%. I think that was a range in which the credit growth was taking place in this country for the last several years. This year, it is single digit, hardly 8 to 9%. And housing sector is, of course, doing better. It is 18% or so. This is one sector, despite this slowdown in the economy, in the housing activities, comparatively it is better, 18% or so, but it could have been much more than that. So there is a single digit, and now the issue is that when we talk of macroprudential policies, so macroprudential policies, you check credit, you impose caps, sectoral caps are there, then you have the group exposure limits are there, then you have the loan to value ratios, they are reduced, and even the interest payment to income ratios, they are also changed. So all this is done. India also, we have done all that. And so the effect of this is that the flow of credit comes down, prices of course come down, and but the contradiction here is, the conflicting situation is that politically, it is not favored. Politically, any government or any party, they would like to have more of housing activity, because housing activity, it has a, apart from meeting the needs of the general masses, it has a multiplier effect, as has been pointed out here. And it affects so many other segments. So politically, it is never, you see, acceptable to the government that the activity should come down. But of course, there has to be some balancing, and that has to be done with some measure of caution and all that. So in the, what we see is that in the emerging economies, the two broad challenges are the developing of housing finance systems, which are not fully developed, as we see in India also, though we may be better off than many other countries, but still I think we have to go a long way, particularly for the segment which has been left out, the EWS, economically weaker sections, the low income categories, and the lower middle class. These three segments, they have been left out. Whatever we have done, mostly it is out. So this is the segment which we have to really focus on. And then, of course, providing affordable housing to these segments. And there we need the public-private partnership. Because we have tried different models, as was mentioned by, I think, Professor Charan Singh. Earlier it was the state model. The state was doing everything till, say, up to 90s. We were constructing the houses. Our housing boards, our development authorities, our municipal authorities, they were constructing these houses and providing to the people. Demand was very little. There was not too much demand. But after the 91 reforms, and the impact happened in 2000, early 2000, 2004, 5, that was the time when the real impact of those reforms came, as it was explained just now. The country couldn't cope up with that. Only the higher income groups, they could do that, but the others, they couldn't cope up with that. Because we were not prepared for that. There was no instruments available to meet that demand or that rush. So that is a big challenge that still is staring at us. What do we do with this 18 million shortage, or by 2022 it may be more than 20 million. So what do we do with that? This may be new housing, or this may be incremental housing, upgradation housing, or this may be the slum areas, huge slums that we have, that something has to be done with those also. So that all this has to be looked at, and so therefore the private sector has to be roped in. Now if we tell the private sector, okay, here is a project, you go and do it, no private sector will touch it with a barge pole. They are not going to touch it. So how do we rope the private sector? How do we, in a way, lure the private sector into this segment, which is very difficult? And it's much more difficult for the private sector. So I'll tell you, I'll come to that later, how the kind of problems that are faced by the private sector, which they just can't cope up with because of the nature of the clientele that we have and the nature of their reach that they have today. So the rising population, young population, rising incomes, urbanization in India, 30%, we are heading to 50%, nuclear families, aspirations, somebody said that, aspirational. Housing is also aspirational. Every family, every young person wants to have his own vehicle, his two-wheeler, his car, and his house. And another thing that has happened is that earlier we could, particularly in the smaller cities and towns, there was no concept of these apartments, multi-story apartments. No one could think of these apartments, and they were in fact looked down upon. Everyone thought of buying a plot. Buy a plot here, there, and plots were readily available, easily available. But now no one can think of buying a plot. The biggest crisis, the biggest contributor to this is the land prices. They have just skyrocketed everywhere, all across the country. Small town, big town, the variation is there, but everywhere they have skyrocketed. And most of the places you can't think of buying a plot and building a house on that. So now the only option is buying an apartment. Go to a multi-story block, buy an apartment and live there. Even those are unaffordable to the segment which I am mentioning. So land prices has been one major contributor. Lack of credit, another contributor. The availability of credit, the housing loans, I remember, they were unthinkable till early 90s. I don't know, my banker friends can tell me. There may be a few cases, but most of us in government, we used to go to the state government, tell them to give us the housing loans. We never thought of going to a bank. Similarly, the general public also never thought of going to the bank. Banks were not offering that thing. This has come, I think, later, maybe 2000 onwards or late 90s, this phenomenon of housing loans from the banks, it became popular. And now, of course, banks are state governments, they are not giving any loans now. Everyone, we have to go to the banks now, or the housing finance companies. They are the ones who give it. But even today, for the informal sector, the kind of people that we are having in focus, the EWS, LIG categories, they basically 90% of them, they are informal. They are informal sector people. So the banks are not for them. I know that I have now experience of both sides, the housing side and the banking side. The banks have their own. We don't have to blame the banks because as one of them said, we need a different kind of setup. We need more of housing finance companies. We need more of microfinance companies. And we need small banks. Mr. Dubey said that. Now we are going to set up more of small banks. So we need that type of structure which can address the requirements of millions and millions of these people who are in the informal sector. The traditional banking system that we have today, they just cannot address it. It will be just tip of the iceberg. Whatever we do, it is not going to address the issue. So we have to think of different model because these people, they can't they don't have access to the banks. Then, of course, lack of adequate housing supply has always been there in an organized sector. We never had this. Now, of course, it is there coming up, but we never had this so much supply in the organized sector. And even today, in the EWS, LIG, and lower middle class, there is lack of adequate supply in the organized sector. The kind of sector which the banks or the housing finance companies would rarely come forward to finance. That kind of thing is not there. Today you have individuals sitting here, there, problem of titles, who is an encroachee, who is not an encroachee. All these issues are there. Myriad issues are there, some of which they have raised very rightly. So, therefore, we have to, how do we get over these issues? We have to think of some ways of getting over this because this problem has to be sorted out. So, therefore, apart from these categories, there is another category that is the bottom of the pyramid, who can't even if credit is available, they can't take the credit. They have nothing. So that is the bottom of the pyramid, the fourth segment. EWS, LIG, lower middle class, and the fourth one, the worst one, is the bottom of the pyramid. They have just nothing. So we have millions of people in the slum areas and otherwise who just can't afford even that credit. So we have to think of them something. How do they do it? And in a big country like India, I'm sure other countries also, where you have the center, you have the states and local bodies, there are basically the three-tier structure, central government, state governments, and then we have the local governments, and then the help assisted by the banking sector, financial sector, the private sector. They are the facilitators. But basically these three levels, the governments, they have to come out very, very proactively, proactively with policies which really have a great impact and bearing on facilitating the creation of housing stock. Ultimately, the housing stock has to be created. Central government has a responsibility by framing the central policies, where the kind of things that are mentioned, interest subvention, because how do we make these houses affordable? Even if you give credit, they can't repay the credit. If the market price is X and you are giving them at that X price, it will not be affordable. How do we make that X minus something, X upon something? That is what we have to do. And there the central government has a role to play by providing interest subvention, by providing project financing, which is being done in some of the policies and for which a new policy is now being framed. So I'm sure this new policy will also contain these twin components of housing project financing as well as interest subvention to this category of people. That is, I think it is 5%, which already has been decided. And then the availability of credit, because whether it is the banks, whether it is the HFCs or the new banks, small banks, or the microfinance companies, you name any of these, the credit system as a whole, it is under the central government. It is regulated by central government through Reserve Bank of India, through NHB. So something has to be done with that to make it more readily available to this category of people. So that is on the part of the central government. Then we come to the state government. The implementation has to happen in the state. So there the state government and the local bodies, they become very relevant. So issues of land and land uses and land use regulations, these are all together. So availability of land, how do you make more land available? Not only by acquiring. Acquiring is when government gives it land. You see, you can make land available by changing your master plans. The planning part is very critical. I remember in Jaipur, we had a new master plan in 2000, this was in 10. By 2010, we had exhausted all the residential land uses of the city. So there was no land use available for expansion of the residential areas. So then we had a new master plan. In the new master plan, we increased the residential land uses by 4 times. So that in the next 10, 15, 20 years, there is no problem of availability of land in terms of the land uses. So this comes at the state level. Then the land building regulations. So you have to have the regulations which really encourage multi-story housing. With the scarce land, now you have to go multi-story. Because there are in the smaller towns again, there is a problem of high-rise buildings. So in some places you can go up to G+3, ground +3 levels, because up to this level you don't require a lift. So lift is a problem of maintenance of the lifts and all that. So maintenance becomes cheap, so you can go up to G+3 or even further high-rise you can go. So that has to be brought into the building regulations. Then very important issue is incentives and cross-subsidization. The local taxation, the state level taxation, the stamp duty, all these have to be remodeled. It has to be revised so as to cater to this segment. If you keep everything normal, then things will not take off. So that is another thing which has to be attempted. Then faster approvals at the local level, local authority level, as was mentioned here, maybe online or some systems. More standardization has to be done. So that has to be. Then when you are providing housing stock, whether the people are eligible for that, are you giving it to the eligible people, right people, or they are again speculators coming forward, buying big chunks of those apartments and then reselling it. So you have to set that right. The rightful people should come. The scarce things are there. So only those people who are, really needy, they should be given that. And there also it's a government role which comes in. And then of course the credit. The banking system has to be taken into confidence, and then the other players are there. And then the private sector. How do we rope in the private sector? That is very important. And so these are the issues, important issues which need to be addressed. Now I can briefly tell you a model which we attempted in Rajasthan in the year 2009 to 13. This is a policy. This is a policy. This was reviewed by DFID. They have prepared this booklet, Roofs of Dreams. I leave it with Professor Charan Singh. Now, what we did was, the first thing was to have a different policy. This was the affordable housing policy that we devised after a very long consultation with all the stakeholders. Policy was devised, formulated. We changed all the building regulations. A separate set of building regulations was framed for this. Because when you have small houses, you don't require big setbacks. You don't require parking for four-wheelers. Two-wheelers is good enough. And what do you need for them? Some community center, some small shopping center, because all this housing may come in the periphery areas, within the city or periphery areas, where you need to give them all these facilities. So all that had to be provided in. And then how do we bring down the cost? How do we cross-subsidize? We are going to the private sector because government sector has a limitation. So private sector is not willing. So to make them willing, we have to give them some, and to make it affordable. So through the private developers, we offered several cross-subsidization incentives. And some of these were, we waived all the charges. Every charge, there were 4 different charges: the conversion charge, the building plan approval charge, the external development charge, and then there was one more charge, 4 charges. We waived these 2 charges. At that time, the market rate was 1500 per square foot. That was the rate. So our target was that we must bring it down to half. 750 rupees we have to bring it down. So with this waiver of these charges, we were able to bring it down by, say, about 200 rupees. Still, there was a big chunk left. So then we offered them TDR facility on their land, up to 1.5 TDR facility, which would take care of the rest of the amount. So with this, we brought down the rate to 750 rupees. So with 750 rupees, we offered these houses to the people, which were unimaginable even 4 or 5 years back. And the people couldn't believe it. They said this is just private developers are doing it. But because to instill confidence, all this legwork was done by our own government agency, including inviting applications, including fixing of rates. Everything was done by us. So then we got good response ultimately, and many of these projects were ready. First phase, 15,000 projects. Second phase, another 15,000 projects. Our target was 1.25 lakhs, 125,000, but we could manage 50,000. I'll come to that also, why we couldn't manage the whole thing. So we could manage only 50,000, largely complete, some in the process. So now these developers, they started building these houses, and we call all the bankers. We discussed the policy with the bankers. We discussed the modus operandi with the bankers, how they will finance this. So they all agreed. After the applications were received, all these applications were sent to the different banks. Wherever the banks were there, 8-10 banks were there. So thereafter, we started following up. With great difficulty, 25% applications were approved. 25%. Because different reasons were there. Somewhere staff problem, somewhere manager problem. The bankers were very good at the top level, at the regional level, at the state level. They are very sympathetic and all that. But when things went to the branch level, that is where the problems came, because the branches were not that sensitized to the whole issue, and then they have other problems also. So now the projects have been started. Earlier, our assumption was that through the banks, the individual applicants, they will be getting money and they'll pay this money to the developers. So developers will have no problem. They will keep getting their money from the banks through the beneficiaries into a escrow account. And from there, the developers will. So because the bankers did not come forward to the extent it was required, so there was a stoppage of the flow of funds. So with that amount of just 25%, the developers found it very difficult to go forward, because their projects, they require more and more funding to complete the projects. Then it was a big dilemma to us Then we went to National Housing Bank, because the bankers, the developers, they wanted a bridge loan, something with which they can complete the projects. So who would give them a bridge loan? No one would give them a bridge loan. So we created a special fund to provide them with a bridge loan. We went to National Housing Bank, got 1,000 million Indian rupees sanctioned, and gave it to the developers to complete those projects. In the meanwhile, the bankers, they considered another 25%. So they got up to 50%. Still there was a gap. Then we got hold of the microfinance companies. There are a good number of microfinance companies now in the country. So they were very responsive. They came and they also took it up in a big way, because as was mentioned here, they are very agile. They very, in a short period of time, they're able to sanction the loans. So about another 25-30% was done through microfinance companies. So in this way, we were able to get over this problem of credit, both at the end of the developers and at the end of the beneficiaries. Then some of the beneficiaries, they went to other sources. You see, there are informal sources. There are money lenders all the time, and money lenders were able to provide to some of them, because the beneficiaries, what they wanted was the credit at any cost. The banks were charging 8% with the 5% subvention at that time also. The microfinance companies were charging 17 to 18%. There was no grudge. The beneficiaries, even the EWS people, they said, we are happy with this. Even 17-80%, we are happy with this. Then the money lenders, we don't know how much they charge, but they also provide them with the funds. And in the policy, we have given 100% comfort to the financial institutions that if in the case of any default, the amount will be repaid by the government, by the local bodies, and that unit will be taken over by the local body and sold to some other person. So that much comfort level we have given in this policy. But despite that, there are problems. So there is a major issue of credit, which for which we have to think of a different model which can cater to the needs. These are different needs, and so that is one major thing. And the second is that the governments at all levels, the central government, of course, they have to take the lead, because this is a national priority for everybody. And then the state governments and the local bodies, they all have to work together in a unison as a team. Only then this can be possible, that we are able to, we can achieve the goal that we have before us of 100% housing for all by 2022. So therefore, I feel that it's a great challenge, very daunting challenge, but there are ways to get over it. At the different, as I have just given you one pilot, this we can take it as a pilot project for the Rajasthan state, which we attempted and which we were able to take it forward. But the problem, there are other problems. One is, of course, the credit, which the developers, they need at times when the money flow stops. Then second major issue, which we have not been able to get over, that is the problem of technology. Because the kind of construction that we are doing in India today or other countries, emerging countries, it takes too much time. A single project, it takes 2 to 3 years to complete. That project may be having 400 dwelling units, it may have 500, 600. It takes 2 to 3 years to complete. So looking at the need for making available 18 million, partly new, partly incremental, I think we need to think of some different technologies also, which may have been developed elsewhere. So maybe some of the experts here, they could subsequently give us that some information about that, because that is one area. Earlier we were doing it in HUDCO. New technologies were being developed, but somewhere those were, I think, left out. Now I do feel that after having experienced all this, we need to have a technology where we could have faster construction. That is the need of the hour. Otherwise, these huge mammoth targets, these may be difficult to achieve. So this is uh, once again I like to thank Professor Charan Singh, IIM Bangalore, and IMF for having invited me to this important conference, and I'm sure that this will greatly help us, help the various stakeholders who are present here, more sensitization. So, because of the thought-provoking nature of the conference, I'm sure we'll be able to develop more models, devise new methods, new ways in tackling this issue in India, and if we can do it in India, I'm sure we can do it elsewhere also, and India can become a model as a country. It can become a model for other countries also, particularly the other emerging countries. With this, I'd like to thank you once again. Thank you so much.